Welcome to the Sustainable Business Council Sustainability Shot. We're glad to have you all here tonight. Wanted to let you know that our next Sustainability Shot will be February 10th, and it will be the Moral and Social Dimensions of Business by Peter Schober of the University Congregational Church. It will be again at the Loft here, 5:30 for the social and 6 o'clock for the presentation. We hope to see you all there as well. We're glad you're here with us tonight. We'd like to thank our sponsors for this night's, for the whole shot series actually. Axiom IT Solutions, Livesey All Systems Freight, the Missoula Independent, Cherry Creek Radio, MacArthur Means and Wells, and the Family Dental Group. We'd like to thank those folks, and if you would give them your business and help support them, we'd be thrilled, and they'd be thrilled as well. We also have a number of folks helping us with food and beverages, and we always let you know who they are. The Missoula Community Co-op / Market has food on the way. I talked to them on the phone a little while ago. It will be here. Big Sky Brewing provided the beer. Liquid Planet provided the wine. And the Loft gives us the use of this facility. And MCAT is here taping. They're all members of ours that provide these services for us in exchange for their membership dues. And finally, some of you may have seen some press that said we were going to have the vice president of the First Interstate Bank here tonight. She called yesterday to say she is on her sickbed, deathly ill, and didn't want to come join us. Unfortunately, we'd love to have heard from her. The couple of things she said, they've just completed a sustainability report, and we were going to get a sneak peek of that report. It's not been published yet. Hopefully maybe SBC can find another venue that we can give you a little sneak peek of their sustainability report. However, excitingly enough, on our board sits another great financier here in town. And so we have with us tonight Susy Estep from Estep Hope & Weber Capital Management. She has a great background. She's a Montana native, by the way. But she spent from 1981 to 1992 working on the New York Stock Exchange with a variety of companies. She ended up being the vice president for institutional strategy and trading at JP Morgan for a while, before returning home in 1992 to work for a number of brokerage houses here in Missoula. And she has since started her own firm and just recently been brushing up on sustainable banking. And she's all set and ready to give you 15 or 20 minutes of info on sustainable banking and finance in general, so you can ask broader questions because she knows the investment community as well, and investment issues as well. And then after she gets done giving us that little blurb, we're going to let you guys ask questions. Susie does have another meeting to get to by about 7.
I blew it off.
You blew it off? Okay. So we may cut you a little shorter than sometimes. But anyway, Susy Estep.
Hi, guys. Okay, I am pinch hitting. So everybody bear with me. I also did not do very much preparation because I was uncertain actually what the First Interstate presenter was going to talk about, and realized that if I tried to talk about the same thing she talked about, I probably would be useless at it anyway. So what I will talk about though is a movement that we have been seeing nationally, and that I think is one of the most positive forces in the financial industry that I've seen in the 32 years that I've been in the financial industry. And that is the movement to move money from the large money center banks in New York and in the significant metropolitan areas to local financial institutions. Now, we want to sustain our local economy and our local community. And just like in that Christmas movie that we all watch, It's a Wonderful Life, George explains that his bank is sustained by you and you and you and you and you put the money in the bank and then I lend it to you. and you, and you, and you. And that's the way it used to be, and that actually worked pretty well. Actually worked very well. You knew who your people were, you knew you were helping your community, you knew that the people who were at the bank could understand your situation and work directly with you rather than making you a box to check on a computer. With the banking crisis that began in 1989 with the repeal of Glass-Steagall, but we won't go there. With the banking crisis that fulminated and then created the collapse of 2007, 8, and 9, the public has become disenchanted with the mega bank, large institution that we were all led to believe was where we could get the best service, the best rates, the quickest and most efficient technology, etc. And the challenge was laid down late last year, by Arianna Huffington, who I don't know how many of you know, the Huffington Post. But she laid down the challenge that said, if we really want to sustain our local communities, maybe we need to quit putting our money in places that they're then turning around and lending it to build dams in China, which there's nothing wrong with building dams in China, I don't think, although I'd be interested to know what communities those dams will flood. To quit putting our money in banks that then create esoteric products that they turn around and sell to institutional clients that at the end of the day put at risk the savings and investments of the American public. So the cry is to move your money and to move it locally. Here in Missoula, we are very, very lucky. We have a number of local financial institutions. Ones that were born in Montana, ones that operate in our cities and communities. There used to be an archaic banking law. I don't know how archaic it was because it just kind of went away recently, where if you were a Montana bank, there was no branch system allowed. And so as a result, each town had a bank. And you would go to that bank and you would borrow your money to buy your house, and you would, put your money in the savings account there, and they would lend it to so-and-so's kid to go to college. And that all, again, that worked pretty splendidly. Out of those, though, with some changes in the state banking laws, we have developed a little bit stronger branch system. But to name a few of the banks that are Montana born and bred, we have Glacier Bank, of course, which probably is the most famous, and First Interstate, who was supposed to come and talk tonight, and who just built a sustainable building here in Missoula, and has adopted an entire menu of sustainable practices, not just around the building, but around how they will interact with their employees and with their clients, Missoula Federal Credit Union, credit unions, and banks, although they're different institutions and they work under different charters, are still local. So we have the Missoula Federal Credit Union, First Interstate, Glacier Bank, Community Bank, Mountain West, Treasure State, a plethora of local banking institutions. And yet, we have, some of us, a misconception that we need to do our day-to-day banking business with Bank of America, which the only presence they have here is the ATM and a brokerage office, or a Citibank, or a number of other large institutions that bring nothing back to the party. So in Arianna Huffington's call to the world to move their money locally, it was truly a call to bring the communities back closer together, to create an accountable system under which you knew who was borrowing your money and who you were lending your money and who you were borrowing money from, and to somehow take it out of the hands of the folks that probably don't give much of a rat's ass about what happens in Missoula, Montana. So sustainability in banking, to me, doesn't mean the same thing, although I am very appreciative of the LEED certified buildings. I'm very appreciative of all of the processes that are put in place, and are put in place generally through training programs like STS, where we learn how to make sure that the printer's always set on two-sided. Simple kinds of recycling things and straightforward, lower our carbon footprint, reduce our impact on the earth, and those things are all fabulous. But it's not just environmental. It's almost about almost completely, not completely, it's almost intrinsically about community. So the piece that I passed out, there are 2 websites written on the top of it. And one of them is the how to move your money. So if you have your money in a great big old banking institution, and I used US Bank and I used Bank America and Citibank because I can't get in trouble in Missoula for using those 2 because they don't have branches here. But if you have your money in a big old national bank and you think, gee, I really want to, be more supportive of my community. I want to buy local. I think we have a campaign with that catchy name in this community. I would encourage you all to look at both the benefits for yourself and the benefits for our community to moving your money away from those large, too big to fail financial institutions, and going in and visiting with the folks at the community bank, at, what's the bank down in Stevensville? Farmers. There are so many terrific institutions here. So I don't think anybody really expected me to give a pitch around what I think sustainable banking is, but I think sustainable banking is community banking. I think putting money back into our community that can be relent to the people who need it. There are also investment opportunities within the community system. Generally in Missoula, in most communities, it's through what we call CDFIs, Community Development Financial Institutions. Our Community Development Financial Institution, certified here in Missoula, Montana, is MCDC, Montana Community Development Corporation. You can put money with them, and they will re-lend it to small businesses in Missoula. Now, your rates of return? What are your rates of return been? Right now, I think the money market that my firm uses is paying 0.1%. That's 1/10 of 1%. So if you could lend money out at 1% or 2% to somebody who's going to start a local brewery, a bread shop, any of those, why don't we explore these options? Why don't we look at that? And again, when we look at safety issues, luckily the FDIC has stepped in. All of the smaller banks, community banks, credit unions, CDFIs, they're FDIC insured. The FDIC will guarantee your deposits up to $250,000 per account. Your money will get lent back locally. You will help build the businesses around you. And it doesn't make any sense just for, quote, convenience, because you can somehow get a sense of the technology must be better or the advice must be better or something if I use one of these mega monsters. The truth is the advice is better at home. The technology is the same. Every bank in Missoula is internet capable and has fabulous online banking services, et cetera, et cetera. So I would encourage you to look into it. The other website on the sheet that I handed out is www.ibca.org, and that is the Independent Bankers ICBA, Independent Community Bankers Association. Enormous amounts of information on that website about smaller institutions, about what happens when you borrow money from them, what happens when you make deposits there, all of the things that could allay any of the mental obstacles that we've put in our heads around banking locally. Because to me, sustainable banking is banking in my community and using my money to help the businesses here. 15 minutes. So that was kind of a pitch, but I actually know a lot of other stuff, so if anyone has questions and things that I can elaborate on. I didn't talk about socially responsible investing, which is actually what I do for a living, because that's a whole nother bailiwick. So I was specifically looking at banking services. Uh-oh.
I'll make a comment if that's okay.
Please, Dre.
My name's Andrea Davis. I work for Homework, which we're a sustainable business council member, and I never lose an opportunity to make a comment about our organization, of course. Homework is a nonprofit in town. We develop sustainably built affordable housing, and we also have a home ownership center where we provide home buyer education, we provide financial fitness or financial literacy, and we provide foreclosure prevention counseling. And I just want to be able to coattail off of you, Susie, and basically say that the vast majority of foreclosure prevention clients that we have are not from community banks. They are from large multinational institutions that took advantage of or gave out. I mean, not in all cases were people taken advantage of. People lost jobs, and that's a reality, and that's what people are being foreclosed on too. But for the most part, our clients are not being foreclosed on by local banks. And that's because those local banks, maybe because they're smaller, maybe because they can't take as much risk, or maybe because they know better, who knows? All of those things are probably in the same pot. But all I want to say is we've been providing foreclosure prevention counseling for 10 years or more, and certainly in the last few years we've been providing it extensively. And community banks are not our problem. It's the large institutions that our clients struggle with. So I just want to basically say that I think your point is well heard from this group. You know, the term sustainability actually, you know, or one definition is the ability to endure. So it really has nothing to do, I mean it does obviously with green building or with this or that, but it's the ability to endure, and the ability for a community to endure is the ability for a community to sustain itself through its own financing, through its own food, through its own systems. So I just would say, good point.
And this may be a whole room full of people who are already banking locally, in which case, great. But the other part of the message is to encourage others to think of it. What was it that Arlo Guthrie says? You get one, it's this. You get two, it's that. You get three, it's a movement. Alice's Restaurant. So I think I can't say enough how much of a difference it makes. Missoula is in many ways a community that will be sustainable probably forever. It will change, but then sometimes it changes back. And I first came to Missoula in 1974, went to college here, and then I left, and then I came back in '92. So, you know, there's a lot here that is available to us on that level. Yes, you had a question.
This is a little off topic, but
That's okay.
Okay. It has to do with sustainable currency, and I was wondering, I'm not really well versed in this, and you hopefully are more so, on the role of the private Federal Reserve in the issuance of currency and how that affects all of us. Because I feel like it's a subject that most people know nothing about, but has a huge effect on all of our lives and our currency.
Well, the Federal Reserve has changed dramatically over the last 20 years. Originally, what you're talking about was the Federal Reserve used the control of the money supply in order to slow or encourage the economy by taking money out of the system or putting money into the system. And that was very popular in the 70s and 80s. They moved away from that because it was even more clumsy than using interest rates to do that. The correlation between, and again, the dollar, the US dollar, which I assume is what you're talking about when you talk about currency.
I'm talking more about issuance of currency, whether, I'll get right to the point, whether we actually even need a Federal Reserve to issue our own currency. And I mean, like, what I'm basically saying is, let's cut out the middleman. Why have an organization that does not allow congressional oversight, that acts in secrecy, but controls all of our lives through issuance of currency? I just, like I said,
well, I think there's a growing discussion out there, and I think there are alternative currency solutions that are being proposed. Some are very organic, and the sort of growth of the barter systems that have gone from just I'll trade you for this to being able to interconnect on the internet and do much more formalized bartering. There are currencies being created in small communities, and I think there's there has been an attempt here in Missoula to have an alternative currency that allows you to trade locally with the folks that also are in your community. That bespeaks a need and a desire. We're a long ways from being able to do that, though. And I think that mistakenly, whether the Federal Reserve continues to exist or not, I think is less important than people think. The Federal Reserve has rapidly been losing power. And also there's a and maybe that's just my perception, but there is a continuing belief that the artificial inflation, the artificial manipulation of currencies, of the money supply, of the dollar versus the foreign currencies, is not helpful, but is, on the other hand, contributory to a lot of the problems we've been having. We are a long way from eliminating the currency exchanges, the currency as we know it. That doesn't mean that there isn't a lot of upcropping happening around that, and that it may grow, and that it may 10 years from now or 15 years from now, that we have changed how we interact and how we trade goods for services. I would tell you that the Federal Reserve blew it, and they will never get back what they had under Greenspan. I mean, Mr. Greenspan admitted himself that he was one of the huge contributing factors to the global collapse that we saw in 2007 and 8. And his arrogance in bringing rates down as low as he did and manipulating that has had and will continue to have a lot of impacts. It is so complicated at this point that I'm not qualified. I mean, I could talk at you for a while about the relationship and what's happening with the European nations and the EU and around, the Greece crisis and what they're doing with currency. I think it's easier for me to say that in a community system, we can do anything we want. And if that is the will of the people, and if that is something we want to have, then it's not a very difficult thing to create. So I don't know if that answered a question or if it was just talking at you or what.
From what I understand, from what I've read and tried to understand it, it's a very complex issue, but until we start to understand it and understand how complex and how contrived it all really is, and how our faith is really the only thing that keeps its value, we need to start as a society be looking at other solutions for currency. I think is the.
I will not argue with you on that. I probably agree with you more than not. Yes.
So when you use the term community financing, that just triggers in my mind the barter or local currency. But you mentioned that there's obstacles to that. What are the biggest obstacles
to barter systems? Yeah. Well, probably if I had to, it's 3 letters, IRS. They don't like it. If they can't track, and that's why the electronic system of tracking our spending, et cetera, is so wonderful for them. If they can't track that I traded you my too many tomatoes for the piano lessons for my daughter, they don't like it. So
there are a lot of communities doing it.
There are. And there's a tracking and recording system that is set up, and certainly should be the intention of always maintaining the system so that it is transparent and reportable. Because again, in spite of all of sort of what we would like to think that the government wastes our money on a local and community sense, my house burned up in March, and I was damn pleased I'd been paying my taxes and the firemen came. I mean, I'll pay more taxes, please. There's a real, feeling in this country around anti-taxation, but the truth is we have to look at the services we don't want in exchange for that. So the reason I got there is because, unfortunately, the IRS are thugs, and they don't really treat a new idea and a new system as if it could have merit. They're just only interested in how they can collect. So there's your challenge, is the reporting system that then can keep the IRS happy.
I was to say, it's also efficiency too. I mean, there's something very efficient about the currency system that we have.
Oh, sure. You got a standard value.
Immediately buy the goods and services that you want. So, we have to work that into it. Seems like in reality we're not going to fully embrace alternatives until we really have to. I mean, we don't do anything, it seems like, in this country until we're really forced to deal with it.
I hadn't had it, thank you. Okay, I don't disagree. Blake.
Susy, you said something about the MCDC and being able to invest in it, put your money there just like another bank.
Yep.
Which is something I've never thought of. So Is it?
So I will elaborate. That there are two funds at MCDC, and recently they have made it possible for people to take money that would be part of their retirement money, their IRA, and put it into their fund, and then that money gets relent out within the community. And because it's through the CDFI system, there are some safeguards around it. There are also some FDIC pieces and this and that. And it's a pretty straightforward process. So I encourage you to talk with them about that. Now, if it's not qualified money, and I must say, a lot of people's money that they've saved, they kind of socked into their retirement accounts. And so it comes with a whole bunch of strings around it in terms of reporting, but they have overcome that at MCDC. They do have a straight ability to make capital investments in their funds, which then are part of their loan pool and relent. They were looking at, and will be developing over the next few years, a hybrid that will do not just lending, but equity as well. So if you are a new business starting up in Missoula and you take a $35,000 loan, which is a micro loan, or you take a $350,000 loan, you could potentially couple that with, they could couple that with an equity investment, and they would become part owner in your business. Which takes us all to the new angel capital, venture capital world that is also emerging very quickly to fill the void of the large banking institutions that in the past were responsible for all the investment banking and corporate finance. So they got their fingers smashed in the door, and now there is a lot of desire on the part of the investing public, both large and small, to invest that money in an equity sense into new ventures that could have profitability, one, but also potentially second and third bottom lines, so that they fulfill with their development of a product a need that will improve an environmental problem, a health problem, et cetera, et cetera. So we're also seeing a really strong upswing nationally in early stage and angel investing among regular folks, to, instead of sticking their money into a mutual fund or some of the traditional packaged vehicles, they want to know where their money is going, they want to know who it's helping and what that company is doing to follow what are called the ESG guidelines, environmental, social, and governance. But that's the other part that I wasn't going to talk about, but it's hard for me not to.
Just out of curiosity, I mean, you're focused on sustainable investing. What percentage of your business stays in Missoula is sustainable?
There's two ways to look at it. So I'm a conduit. I invest for clients, on behalf of clients. And if it's their desire to have money, part of their money at a CDFI like MCDC, or we always recommend a local banking institution over a mega bank. The number of clients that want that is probably 50% who are asking to do that. Now, I can't take and put your money with MCDC. You have to do that, but I can send you there. So it's a growing movement. The venture capital, angel capital piece is getting bigger and bigger. So many investors who have portfolios of any size, 50,000 to 5 million, will put 5 or 10% of their money into new enterprise and say, I would like to make sure that XYZ businesses, there's a couple of really exciting both technology and scientific, chemical, and whatever kinds of businesses that have sprung up in Missoula recently. I mean, I went out to visit a company that Martin Horn is on the board of directors, Origin Biomed, and you can't believe the stuff they're doing. They're a Missoula company, and they just finished their round of raising capital here. I don't know what you guys raised, $1.5 million?
2 million.
2 million.
I mean, in 3 batches.
In 3 batches. And those kinds of investments are available to everybody. They might carry risk that is higher or lower than buying stock in Johnson & Johnson. That will be for you to decide. And that will be for you to look at very carefully before you choose to invest your money there.
Can I ask a basic, is that stock that's available or is, okay. Because that's one thing I was wondering is like locally, do we have a lot of companies with available stock?
We don't,
Right? Or, you
we
know, I
have
feel
a
like
lot
when I
of-
go to the investment plane, I don't have a lot of options on.
Actually, we do have a lot of companies that are looking for capital in Missoula. The problem is that there's a regulatory issue that there's a very small percentage of the money that you raise that you can raise from what is called a non-qualified investor. So I think it's 35 investors can be non-qualified investors. Everyone else has to meet a criteria that is set down by the regulators, which is that you have to have $2 million in net worth or $200,000 in income each year. But there are 35 spots in every company that can be filled by anybody. Any of us can invest in Origin Biomed as long as we meet their minimum investment, which again may be $10,000. I don't know. Treasure State Bank was a local public offering that a lot of people invested in here locally. Unfortunately, it turned out not to be a success, but there are lots of companies looking for capital. I would send you back again, probably, and it's hard because there's no good resource to say, here they are, and I know there's some people who have tried to build that, but to date that hasn't happened. There are a couple of small clubs and groups that have formed around trying to explore new business and where the investment dollars could go and helping do collective due diligence on the companies. But yeah, I get companies coming to me all the time saying, do you know folks who would be interested in this round of, we're trying to raise X dollars, and do you have people who we could talk to? Yes.
There's a very small scale investment opportunity being offered through the food co-op.
Right, exactly.
They have that loan program. They have scaled loans from $300 to $3,000. They're paying about, and I'm not sure, but I think about 4% interest. And it's sold, I think, something over $20,000. They'd like to sell another $25,000. Replace another $25,000.
4% is a terrific rate of return in this market. Now, I'm not going to make a judgment call on the safety of the.
Well, and there are risks. I mean, yes.
But I will say that that's an excellent rate of return. And what have you done? Especially if you live in Missoula, and you're a person who wants to be involved in the co-op. You want to be able to shop there. You want your neighbors to be able to shop there. We have room in this town for another cooperative food location, and one that is, somewhat more accessible to the entire community regardless of income. So absolutely that's a terrific example. Blake.
A few years ago there was a Montana state program where you could voluntarily contribute to, I think, a venture fund, and then you got a tax credit for a bunch of years, and I think it ended up being called the Glacier
I remember
Venture
badly.
Fund. Do you know whatever happened to that program? Was it successful? Was it?
I don't know, and it may not have been successful. So here's the problem with this kind of investing. Because it is relatively new, and it's new both in the sense that the companies are just starting up, but new in the sense that there's no money for Wall Street to make on a company that's going to have $10 or $20 million in revenue. They won't make any money on that. So when you have these smaller sized companies, there's no good mechanism for connecting the investor to the investment. And because Wall Street got so huge and got so interested in huge amounts of capital, we don't have a good functional interface. Funds of the kind that Blake is speaking about are available. You go on the internet, you can, there's one around here in Kalispell or something. What you have to realize though is that because the companies that you're looking at are new, you have to do some pretty significant due diligence. You have to figure out who's running the company and are they qualified to do it. There are 4 gazillion fabulous new ideas every single day, and almost no one can execute on them. So you have to look at management very seriously. You have to look at their board of directors. You have to look at how they've been funded to date, what their patents are. And collectively, with a group, that's not as onerous as it sounds. It's actually kind of fun. So there are a number of angel clubs throughout the country that do just this, do venture capital together, like the old investment clubs used to do. But
There's
now,
one in Missoula started up, but it's in its
Infancy.
Yeah, and they have regular meetings.
but this is coming. You're going to see this part of this way of connecting capital to business on the ground without a gigantic intermediary sitting in a stone castle in New York become bigger and broader and wider and more popular. And the reason is that the public has become disenchanted, and rightly so. And they want to know that at least if I invested in the company that Martin's on the board of, I know Martin, and maybe I won't make a bunch of money, but I will have pushed further a science that could help change the world. That's the second and third bottom lines. I'm going to employ people locally, and I'm going to help push forward something that could actually have a significant impact if the science or the chemistry or the product or the technology they're working on really is something that can change the world.
Maybe I should say something.
Sorry to put pin on this on
Just to give you an
here.
idea, I was actually quite, how should I say, flabbergasted about our shareholder meetings are kind of family reunions or extended parties, because all the investors who invested into the company are family of employees, founders, friends, mostly Missoulians, I would say 95%, and some relatives which are out of town. It creates a different kind of company. Big outside investors would probably roll their eyes and say, oh my gosh, what's this? Because of that, because, and I'm biased, of course, but, and I'm not a banker, I'm not a finance person, but I felt like that our shareholders really care about our company because they have invested their money in it, but they also care about this community. That's why they invested in our company. Plus, they, you know, because of the small size, they practically know every employee, and it goes in the same thing what you said about local banking. It creates a different environment, which is very pleasant, except when things go a little bad and somebody says, this is my grandkids' college money. But then we say, well, you're not supposed to invest your grandkids' college money in high risk.
And I'll tell you, Martin, that they said that if they said that to your company would at least have a sense of responsibility.
Oh, yeah.
And you can say that to all those guys that sold us all that crap for all those years, and I promise you, Goldman Sachs doesn't care. I suppose that's not a good thing to say on film, is it? The Goldman Sachs. Has everybody seen that video? You asked me about the Federal Reserve. There's a fabulous YouTube video that went around about 2 months ago, and it's animated, and it talks about the Ben Bernanke and the Goldman Sachs. And I think the reason that the language is so funny on it is because it's actually a translation. It is a scream. So just Google YouTube Federal Reserve and you'll get it. It is so funny. It also will explain to you the stimulus that was just done. Once they'd lowered interest rates to 0, and then they decided they needed to kickstart the economy one more time, they implemented this next stimulus, which didn't have the effect that they expected it to, but it's very, very, very funny. And it, again, the credibility of the Federal Reserve is called into question in a significant way. Yes?
I have a question about IRAs, if there's any opportunity on a community level to take your IRA and move it into something in the community, either through MCDC or...
MCDC is the only one I know that has the capacity to do that right now. Now, you can put your IRA at the credit union, and you can put your IRA at various financial institutions, but they're just going to take it and invest it in mutual funds that are all part of that bigger system. Or, if you insist, they can put it in cash vehicles here, then they would use the money locally.
But you could take it to NCDC without penalty then?
Yeah, you have to move it custodian to custodian.
Okay.
And the custodian they use, it becomes a custodian transfer. And yes, there is no penalty and there is no tax. You just have to do it through the right system. And they have developed that system, so they know how to do it. I think it's a little bit of a pain in the ass, but once it's done,
They can help you with it.
I'm sorry?
The NCDC can help you with it.
Yes.
Yeah, they would be interested to do so.
They know how to, yeah, and there was a bunch of presentations over the last couple of years by them around exactly this. You know, take your retirement money, your IRA, put a piece of it locally, help invest in building our own community. Any other comments? Observations? Criticisms?
I have a question.
Okay.
So I've been seeing a lot online, and I don't know how credible it is, that the U.S. has printed trillions of dollars since March 2010 and causing inflation in the world currency. And is that going to have an effect on the sustainability of our currency that we use as a community?
Yes.
How are we going to feel that? How is that going to affect investors?
The printing of large quantities of currency will inevitably result in inflationary pressures that could, in this particular circumstance, because we printed more money than we ever have before, and because we have other inflationary factors at work, in a hyperinflationary environment of the kind we haven't seen since the 70s. Now, I hope that when inflation starts to rear its ugly head, everybody remembers that when inflation first starts, it feels like growth. It doesn't feel like inflation. Because you're selling more stuff, because people want more stuff. And then you're making a little more money. And so it feels like growth. But then you're trying to hire people, and you have to pay them a little bit more. And that whole cycle can take 2, 3, 4, 5 years before it becomes unsustainable and untenable. There is a point in time, and it's interesting to me because there's a lot of work done around what the catalyst is, and the interesting question, you know, behind the real estate crisis was, what was the catalyst that made people one day say, "I won't pay those prices in Las Vegas, California, Florida, etc." We're not really sure, but inflation in and of itself can be very damaging. It can push us into a next recession. I don't think that will happen until 2013 or 14. I think the Fed is as likely to mess it up and make it worse as they are to fix it.
Is it fixable?
Well, no, yes.
Bring more money.
Could be. Could be. Well, let me put it this way. You're young enough to not know what I know, which is we will get through this, just like we get through all the rest of it. And it might be different on the other side. We may actually have a lower standard of living in this country than we've seen since the end of World War II. We may actually have to live with less stuff. Well, why is that bad? I mean, and I hope I'm speaking to an audience that isn't going to throw rocks at me over that, but the truth is, we had an unsustainable standard of living, and we created an unsustainable economy around it. So truthfully, if we back off of that somewhat, it isn't necessarily bad, it's just different. So don't make an assumption that as it turns and moves and is fluid and changes and all these factors enter in, that what's going to come out the other side is going to be some horrendous hardship. That might not be the case. It may actually be that we find ourselves in a happier and easier and more enjoyable lifestyle than we have.
Kind of like Italy after the Roman Empire.
Thanks, Martin. I am forever an optimist, and so as I said, we get through all this crap. This is not the first financial crisis. I've gone through, what's his name, junk bond king Mike Milliken, the Latin American debt crisis, when we created Brady bonds. I was at JP Morgan the day I was in the meeting when they said, okay, the only answer here is to create these bonds that'll bail them out, and we called them Brady bonds, and we guaranteed them by the U.S. government to guarantee them. This is a whole series of events that have gone along the way. The thing that has changed, though, is that we have escalated our desires for whatever this is that we're chasing to a higher level than it ever was historically.
So I have a question for you then. Then are there investments out there that are somewhat immune to inflation?
Yes. They're not immune. Nothing's immune, but there are investments that will actually do well in an inflationary environment. And I am sorry to tell you that the most straightforward correlation or inflation fighting investment you can make is gold. But that's why gold is $1,300 an ounce, because believe it or not, if you listen to the markets, you would realize that inflation is coming, and it's coming in a big way, and that's why gold is at $1,300 an ounce, because it's a precursor to what will be coming. The other investments are companies, stocks, and when I say stocks, I mean companies. I mean companies that are going to supply goods and services and have things that people need and want. And during the inflation, the price inflation, they will be showing profit. There will come a point where that price inflation outpaces what they can pay on the labor side, but that's, as I said, a few years down the road. So the two classic, well, there's three classic hedges to inflation. One is real estate, one is gold, one is real estate, and the other is stocks or companies.
Be gold and silver, right?
I'm sorry?
Gold and silver.
Precious metals. Palladium, you name it. Copper.
So what about real estate? It's still not.
Well, real estate's the big bargain, but there's a hook in the real estate market right now that's never been there historically. The banks won't lend any money to buy it. We built the real estate market in this country around the idea that we could borrow the money to buy it. And we're in a current situation where the banks can't. So the real estate market, although it is a screaming deal in a lot of areas of the country, it doesn't matter because nobody has any money to buy it, and the banks won't lend. So there is a hook in the real estate market that I've never seen before in my career, and I don't know how that will play out. If you're brave, if you are long-term, and if you are confident that you can live without the money for 10 years, I think real estate's fabulous. And I think real estate in Missoula is fabulous. But good luck getting the banks to lend you the money. But the community banks, the local banks, the credit union, you got a better shot there. It is entirely likely or possible that they will lend. When the great big banks will look at your loan application and you'll have filled in whatever boxes you filled in, and they'll put it in that pile over there because they don't want to lend you any money.
Any other questions?
We went way off topic. I hope that was okay.
That's great.
Since I didn't really have a topic.
I want you to join me in thanking Susie for stepping in at the last minute. Doing, as always, a fabulous job. Thank you for joining the Sustainability Shot with us tonight, and we hope you'll all come join us for the February 10th shot or the March 10th shot. Thanks.